loaded, most certainly. Yeah, I get it loaded. Just ride the way, if you ride the way.
What is going on in this video? We're actually going to break down 3 liquidity steps that you should follow in trading, and we're going to talk about how you can actually enter in the market, stop trading against the market and losing out on trades and so forth. We're going to get straight to it. So first and foremost, let's head over to my whiteboard. You guys see here that we are going to get into the very first 3 things of liquidity. Now, first, we got to understand one thing, which is called the range. Now, when I talk about range, what I basically refer to as range is an impulsive trend. With this impulsive trend, this is actually going to be your range from your top to your bottom or bottom to top. This is actually going to be your range. Now, within this range, you need to understand where liquidity rests for one, and then you also need to understand where market could head to in this range, which is this impulsive trend, before it goes in the same direction it was going. So let's say that market was coming from an uptrend or a downtrend. We want to continue our bias going down. This is very important. Mental bias is important. So if we already have this assumption of seeing market going down, we can just simply see and say that, all right, we need market to come to some liquidity areas, take it out, and then we can go ahead and look for these opportunities. So when it comes to liquidity, we got to understand what liquidity actually means in trading. So basically, liquidity is just a pool of thousands to really more, so not thousands, but millions, even billions of dollars in a specific area. For us, we have orders, pending orders waiting here. We might even have current orders that's already open, but we have maybe also TP levels resting around here. We also have our stop loss resting around here. That is what liquidity is in the trading world. So typically how this will look as far as structure is that we need to see market essentially just building up a pool of money, right? And this is known as equal highs, triple lows, and so forth. So what will happen is liquidity has phases that it wants to do, especially for those that trade whack off or understand whack off. This is basically whack off without you knowing, but I talk about this a lot. And I mentioned how if you have a liquidity high being taken first, something like this, or not necessarily that, but let's say you have a liquidity low being taken first, I look for liquidity to take out the low. Once that happens, I then wait for it to go and take out the high. What happens though is that everybody thinks this move right here is the change of character, the market shift, or we're going up, let's go ahead and buy it. So now everybody's buying it here. But theoretically, what actually happens is it takes liquidity out from phase 1, which is going down, and then phase 2, which is going up. And then within that, this is now where you can find like your POI levels or your order block levels or your supply or demand levels that you will want market to tap into. So anything above my liquidity high, I am looking for market to tap into. Possibly we can see it tapping into an order block here. Once market taps into this order block, I am simply going to now take this wave. We're going to wait on a low to break out, right? Grab that liquidity, and then we should look for market to come back up and then shoot down to take out these lows, because this is also liquidity resting here. So we got to understand the whole direction of market on a higher scale. So we got to understand the whole market shift on a daily. Once we understand that, we then must understand that now market is going down off the daily. This pullback from a 4-hour or 1-hour time frame is just temporary. We need to understand how far this pullback can go based off the daily range, which is from here to here, and then we take the opportunity to sell it. This is very simple. If you make it simple, it's going to be simple. But if y'all want to complicate it, y'all can complicate it and skip and go to another video. But what I'm basically trying to get at is that this is literally what we look for in the market to take this trade. So let's go ahead and look at the live market, and let me show you guys what we now go ahead and implement. All right, so we're looking at gold. I'm gonna basically show you guys the most basic rundown of everything. Now notice how it's already trending down. We clearly see that if we head over to our left hand side, we see that market basically broke this low and it created a whole new low. Very simple, right? Now here's where people get confused. They see liquidity. Now liquidity can either be as simple as a straight line or it can be something diagonal. You got to understand, as long as you can see it aligning with the trend line, that is liquidity being rested there. So notice here we got tons of liquidity being rested here in this area, and even if we were to draw out a straight line, notice how that liquidity is also being rested right there. So simply, right when market goes up, everybody assumes right away that, oh hey, this is an uptrend now because we had a shift in the market, change of character, such and such. Market's been going down too much. RSI is oversold. RSI is telling me it's time to buy it. Let's buy it, guys. So this is what everybody's doing. No, this is not what you want to do. If the mental, or if you already have your mental bias set for a downtrend, keep it like that, because at the end of the day, what's really happening is it's faking everybody out for one, but it is getting in a higher level of an order block off of that range that we just talked about. So this range that we're talking about is from here to here. So if I see liquidity is being rested just roughly here, all I'm simply doing is waiting on liquidity to be taken out, and then anything above my liquidity zones, I like to spot order blocks. I like to spot any key levels, right? Any key levels where I see market has settled. Settled basically means where you see a power red and a power, really depends on your colors, but a power red and a power green candle. That is where I per se call POI levels, known as point of interest. This can be anything from supply, demand, order blocks, rate, resistance or support, and so forth. But when market taps in those levels, you don't just get in a trade yet. I still wait on an extra confirmation. Now this confirmation could be two things for you guys. You can wait on a low. If you see liquidity also from a low right here, you can essentially just get in at the breakout of this candle, and then if so, you just look for a simple 1-to-1 trade. So if we got in here, this is where the breakout happened. We have our stop loss resting right above this high, and we just look for a simple 1-to-1. We can just simply take this 1-to-1 trade, and then from here, all we are going to simply do is wait for it to tap in that, and once it does, we can either move this stop loss to break even. That's one way to enter. That's like a quickest way for in and out trade. That's what I like to do sometimes when I want to get in and out. Just look for a simple 1-to-1. Now, if I'm feel like, all right, this is going to go further down, I'll wait on a pullback after it breaks out a low. So this is my low. The pullback, I'll wait on any pullback for it to come in, which is right here. This is that pullback. So for me, I will enter off of a pullback, short it right here. Stop loss would be resting above this high, and then for me, I'm using my Fibonacci to find my TP levels. So for me, you can do it two things. We can draw all the way from up here to down here. Wherever you see your 27 at, you just take it to there, or you can go half in here as well. So once you take it into these levels, all you're simply going to do is get in and get out, and that is literally how you guys can master trading. It is that simple. So guys, if you aren't already, make sure you follow me, The Real Official Solo E, on Instagram, and then also subscribe to this YouTube channel. We go live every single week, live trading, legitimately live trading. I am literally turning a $4,000 account into 40 grand. That is what we're doing live. Also, I will be doing I have my own funded account with Offspring FX, so I will be showing you guys me trading my live funded account with them as well, so you guys will see everything that I teach, that I talk about, and you guys can learn more off that. Make sure you sign up, links down below. See you guys in my next video. Your boy Solo, I'm out. Peace.